Okay, folks, this is our dollar index. It's our daily chart here. As a reminder, I've already posted the teaching for today. It was a live execution over euro dollar using a market maker buy model on a 5-minute chart. So I'll counsel you to go back and look at the previous recording. It's the first recording of the October 2019 commentary thread. So we have the dollar index. So we didn't get above the high here. We did get above the rejection block in here in this high yesterday, and then it rejected and went lower. We have a little bit of an imbalance in here that would rebounce to the bullish order block, and that would be here at 98.30. So it's this low to this high fair value gap. So we'll see if that is a point of rebalance. Drop down into a lower time frame hourly chart. You can see the breaker here. Traded right up into the breaker, and we'll see a better version of that on a 15 and 5 minute. And then price moved for the sell side liquidity pool here. We have another sell side liquidity pool resting in here, and bullish order block fair value gap. So 98.37, 98.40 in that area. Looks like it's the next draw in liquidity, and we'll see if that does in fact come to fruition with higher foreign currency prices. Here's the 15-minute time frame bearish breaker. This low here, 99.02. Got well into that with 99.05. Rolled over. Liquidity, as I was mentioning in the recording, this is actually returned back to Friday's high. They're acting resistance, filled in the imbalance, then ran for the liquidity, as I mentioned in the recording today for euro dollar. So we're expecting some continuation lower on dollar, foreign currency to continue higher a little bit. Now again, as a reminder, non-farm payroll week, you could see in the euro dollar trade the difficulty price had when I was expecting specific signatures to occur. It's just we are not seeing your typical high volatility, very liquid market. It's not happening because it's non-farm payroll and it's Wednesday. So it gets like this. This is exactly what I was explaining to you, and this is why we try not to trade after New York Open on Wednesday. So we're on the sidelines watching price the rest of this week. Try not to push it and get into things you're going to regret. So here's the outcome of that euro dollar trade. You can see the entry down here, and there's the business down here. I'm not going to go over all this because I did it live over the market. The market came down, hit the stop, and then drifted higher, came back, rebounced into a bullish order block. One surge in here, and now we're consolidating. So I'm thinking we're going to see Asia give us the 109.65 level right up in here. And if we drop out to an hourly chart, zoom out a little bit, we have that bearish order block and that SIBI, so sell side bounce, buy side inefficiency, right in here, that equal highs. It will punch through that likely and rebalance to the bearish order block. And then if we run through this, we have the liquidity pool resting up here, which is a little bit beyond the scope of this view for right now, but who knows, we could see something in non-farm payroll that sends it up here and then rebalances up in this fair value gap here and SIBI. British pound 5-minute chart. At the time of the recording in the New York session, I mentioned we were inside the fair value gap here, and I mentioned also that we would see this liquidity pool in equal highs be tagged. The high comes in at 23.13 and 5 pipettes. 10 pips above that would be 123.23 and 5 pipettes, and the high comes in at 123.23 and 7 pipettes. So there you go, and it came back down into another fair value gap bullish order block combination. Liquidity runs one more time. Again, the high is what? 23.23 and 7 pipettes. The high here, 23, 23, and 4 pipettes. So we were just shy of running. Yep, we were just shy by 3 pipettes to get back to this old high. Now they left equal highs in here, which is interesting. And we're going to see if it has the ability to run higher with a weaker dollar. Dropping out to an hourly chart. Next pool of liquidity is up in here. So we'll look for I'm not sure why that's doing that. Well, we'll use this. 23.45, 23.50. That would be the next upside draw on liquidity for buy side liquidity. And then we have this over here. That would be a little bit more intermediate term. May not see that this week, but if we continue higher, that's the intermediate term draw I see for British pound. This is the oil market. And I want you to look at this for a minute and kind of think about what you see here. Okay, on September 14th, 2019, there was a drone strike on Saudi Arabia over the weekend. And the market gapped up in here and ran up and stopped right here. And ever since then, we've drifted lower and lower and lower. And I want you to take a look at this with the lipstick that we use in our analysis concepts. So we have relative equal highs, buy side liquidity pool resting right above that. So isn't it interesting that on the heels of that drone strike, it just conveniently went up into that buy side liquidity pool, and it has since went lower, traded back up into the bearish order block. No price structure in here. So we filled in that sell side liquidity pool here. We plunged into that today. Now let's zoom out a little bit. Okay, and this is our next pool of liquidity here. So diving under 50.5 would be expected. And if we go out to a little bit more, we have this level here, which I'll show you on a weekly chart. It's 49.25, and let's go to a weekly. Zoom in. So we have BISI, buy side imbalance, sell side inefficiency. The top of that gap is 50 and 40, so 50.40, and the high comes in at 49.21. So we'll say 49.20 as a low. That should be expected. Also, seasonally speaking, October is a bearish month for crude oil. So this is what we're expecting here, draw down into this. But certainly right below these equal lows, that would be the next immediate draw on liquidity. If we go into a 15-minute time frame, you can see a beautiful institutional order flow entry drill. Look at the high here. Okay, see that? 54.12. Okay, 54.12, and we have the fair value gap existing in here. So the market drops down and sends it higher, right to 1 point above, 54.13. Again, reminder, 54.12, 54.13. All it has to do is trade back to this old high. That's your entry, okay? And your stop will be above here. The market breaks down, fair value gap in here. The high is 53.90, so you got to just trade to 53.90 or higher. If you want to go deeper into the gap, you can trade 53.91, 53.92. The high, 53.93, and then sells off. And then sells off and creates a what? Fair value gap. What does it do here? Fills it back in, sells off. Now you're an oil trader. So a move from 54, we'll just call it 54. 54 to 53 is $1,000 per lot, per per contract if you're trading in futures. But that's a nice move there. Very nice move. This one here, bearish order block, we trade back up into it here, and then slow erosion. Relative equal lows, so selling above here or selling here. Low resistance liquidity run. Month 1 content. Fair value gap, entry. Beautiful. Fair value gap, entry. Beautiful. Right in here. There's your liquidity. Plunges. Now, if oil is having such a hard time and trading aggressively lower, that's also going to impact Canadian dollar. And Canadian dollar had a sell-off today in the futures, but rally in dollar CAD because it's inverted. And there you go. Price had a nice surge. Next buy side liquidity pool on dollar CAD is 33.80, and then the relative equal highs back here, which come in at 134.31. So there's your upside draws on liquidity for dollar CAD. And finally, for gold, we have this fair value gap that's remained. It didn't get down to where I wanted it to. And this is typical. Again, if this had not been non-farm payroll week, I'm confident this would have went down and slammed right in there and filled that up. And it didn't. Okay, so let it be a lesson to you, knowing that you're going to get very frustrated if you want perfect symmetry in the first week of the month. Okay, it's like the Judas swing of the monthly range. You got to be very, very nimble, be conservative with your objectives and what you expect the market to do. Now, what I have outlined in here is a small little fair value gap with a bearish order block. We could still see gold rally up in here with weakness in the dollar, but if we get above here and trade through that, remember I said if we go above this, it's really bullish on gold, and we'll see if that's the case. But it could trade back to here and then roll over and go for this. That's what I'd like to personally see, and that could happen with the dollar index going back into its fair value gap here. So this could drop down, allowing gold to rally up into here, but stay below this high. If it goes above this high, I don't like being short gold. Okay, and I believe that's going to be it. I will talk with you by way of Twitter tomorrow if there's anything that I want to point your attention to, and I will not be doing anything with non-farm payroll Friday. I will try to have your video up by 3 o'clock on Friday so I can have the weekend just like you guys. And until I talk to you then, I wish good luck and good trading.